This week is going to be another crazy earnings week, especially for semiconductor, tech, and AI investors. On today's episode, I want to take a closer look at three companies that are reporting this week that I think kind of hit either of these markets. The first one we're going to look at is SUPERMICRO. The stock definitely kind of saw a major hit in the past 5 days as we did see kind of some preliminary results. Another company that I want to take a closer look at is one that I don't discuss too much, but Unity Software, one that I really do enjoy in the long term. So unfortunately, this thing has sucked in the past past year or so. And the next one is Astera Labs, ticker ALAB. Now, this is one that I don't own. SUPERMICRO is another one I don't own, but Astera Labs has gotten a lot of popularity recently thanks to the overall AI investments. So in today's episode, what I want to do is following. First, take a closer look at when these companies report earnings, what the market is expecting, and more importantly, three things for each company that investors need to keep an eye on. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so first let's start off with SUPERMICRO. Actually, let's start off with the calendar. So we can see it is going to be a hectic week starting from Monday. If you are Palantir, obviously Palantir is going to be crazy. Then Tuesday you have SUPERMICRO. You have AMD. I just recently did an AMD video a few hours ago. Make sure to check it out. But you have a lot of other kind of AI companies, a lot of networking companies, and a lot of fintech space. Then on Wednesday, again, the list continues with a lot in popular tech stocks. Even Thursday is going to go, I think this is probably one of the, even though it's not any real one big name, it's a lot and a lot of popular names, in my opinion, that are reporting this week. So let me know in the comments below, what are your top 3 stocks that you are watching this week? So maybe I can do a video on the ones that are the most popular. So the first one we're going to start off with is SUPERMICRO. So SUPERMICRO is expected to report earnings on Tuesday, as we saw, right? So Tuesday is SUPERMICRO. The other company is going to be Astera Labs on Tuesday, and we have Unity on Wednesday before the market opens. So for SUPERMICRO, unfortunately, we haven't seen any updates to their estimates. Right now we can see that the market is expecting roughly $5.1 billion in revenue, and that would be roughly a 32% year-over-year change, especially since same time last year they did about 3.85. Now, this is the crazy thing about looking at expectations and kind of forward numbers, is sometimes it takes a while before analysts update their numbers. Luckily for investors, SUPERMICRO already gave us preliminary results, and this is pretty much what we are going to see. So SUPERMICRO is expected to see revenue of between $4.5 to $4.6 billion. The main reason is during Q3, some delayed customers' platform decisions moved sales into Q4 instead of staying there in Q3. But the company did mention that new generation product design wins are robust. The other thing that is kind of crazy is there was a massive hit in diluted net income per common share. They are definitely taking a huger hit on margins. Now, the company does mention that one of the main reasons non-GAAP gross margins were a hit was due to higher inventory reserves resulting from older generation products. Now, as if one is a SUPERMICRO investor, personally, I'm not touching this. Even if the stock looks valued, I'm just not a huge fan of when when fishy stuff happens, right? Definitely not a company for me, but I can 100% see the growth opportunities for others. There's certain things that I wouldn't touch, and SUPERMICRO is one of those. Now, in forms of what I think investors should be familiar, the first thing is this issue of kind of these new generations being huge win and some of the older generations losing in demand. How has SUPERMICRO handled its inventory? Is it stacked too much in things like the Hopper generation? Is it stocked too much in things like the MI300 generation? Because right now, what's most likely going to be selling is the Blackwell platform, the MI325, and the upcoming MI350 for AMD. So the real question is, how has inventory been controlled? The second question is, we did see kind of a hit in gross margins here, right? The company is blaming higher inventory reserves resulting from older generation products. I mean, from that answer, we can already see that maybe they weren't that good with handling older inventory and they might have over ordered on some of the kind of previous generation, FOMOing out maybe a little bit too much. So that is definitely something investors should kind of keep in mind out when looking at Supermicro. How well are they managing things? But then in forms of gross margins, is the old inventory the only issue? Or is there just so much competition now that this gross margin is getting even tighter and tighter than it was before, right? So I think those are going to be the two major questions. And actually, let's go with the third one. I said for every company, we're going to have three. The third one is the company previously guided for fiscal year of 2026, which starts in about a quarter from now. Fiscal year of 2026, they expected some massive, I believe it was about $30 billion in revenue plus. Is that number still intact for next fiscal year? Or has there been any changes to the next fiscal year guidance? And I think that is going to be crucial. If they were glad to share us the information last quarter, they should be easily happy enough to share that information this quarter. If they don't, that can actually be seen as a red flag, and maybe investors and analysts are going to run away. So Supermicro investor, in my opinion, going to be very, very volatile throughout this space or throughout this week. Now, let me say, if you want to learn more about the semiconductor market, about the AI market, make sure to check out my free newsletter, whatthechip.happened.com. When Supermicro kind of talked about their preliminary results, guess who did a great article on it? Make sure to check out this free newsletter. Now, the second company I'm going to talk about is Unity Software, and the third one we're going to go with is ALAB. So Unity Software is, for those that are not familiar, a company that creates kind of a platform for you to design, create video games. They're also used in a lot of kind of visual effects for things like movies and TV shows as well. But most of their market, especially in the gaming community, is in the mobile space. Now, this company, unfortunately, has gone through many transactions and many changes in the top end of top management because of some things that the last management was doing that the market, developers, and everybody was not happy about, that the board of directors wanted to kind of start a clean slate. So that's something that's very, very crucial. So Unity stock right now, year to date, unfortunately down 12%. In the past year, the stock is down roughly 15%. I am a shareholder of Unity. This is one of those stocks that I believe my cost basis is closer to like the 30s and the high 30s. And this is a stock that I own. I believe in the long term, the Unity market and the kind of creation here is going to do well. So this is a company, to be honest, that I don't look in my portfolio. I'm just going to keep holding it. Right now, I'm just holding my bags quietly. But there are a few things that investors, in my opinion, should consider. So again, this is more of just understanding what the market wants. So revenue is expected to be $417 million on estimates. Now, this is down about 10%. And Jose, many might be wondering, Jose, you just talked about Unity. You said maybe there was the bullish case. Why is this company's revenue expected to go down 10%? The main reason is with the new management. A few things that they've done through the past few quarters is cut a lot of the fat. And when they mean cut a lot of the fat, there were some markets of them that they were growing revenue, but on the bottom line, it wasn't really moving anything. So it was like, it was a business model that didn't make sense, or a business segment that shouldn't even exist, because at the end of the day, it wasn't going to make money in the long term of things. So they cut that off. And because they cut that off, that's going to reduce a nice amount of their revenue that they had last year. Earnings per share on a GAAP basis, we can see is expected to decline as well. Now, I think what's going to be more crucial is, even though it's going to be a year-over-year decline, are we still going to see strong numbers in revenue, and what do they say about guidance? Especially, these are the top three things that Unity investors would want to track. First is the developer adoption of Unity 6 and new pricing models. So Unity 6 just came out. It hit around 2.8 million downloads in the late 2024, and saying that the early demand and for some new subscription tiers were also encouraging. They also are kind of including a lot of their AI assisted tools here with Muse and Senses. So hearing more about that would be great. Seeing how their overall core product is developing, how is their core product being kind of reviewed and seen by the developer and their community. So that's number two. And number one, as obviously that has taken a huge hit with the prior management decision. Now the second one is their growth solution, which is ads and monetization. Like I mentioned, they do focus a lot in the gaming space. Now in the gaming space, it's a lot free to play, but when you get that free to play, you get hit with a lot of ads or pay or pay to win. Unity is a great winner from that. Now, in the last quarter, this company mentioned that they were kind of changing some of their AI, their app advertisement technology, and they were going to focus more on the AI-driven targeting technology for advertisement. And unfortunately, kind of moving that around and shifting that technology was going to create some headwinds, at least in the first half, especially in quarter one. The question is, are those headwinds gone? And has that transition fully moved on? Are we now in this kind of AI-driven targeting upgrades? If not, how much of a hiccup is it? And if it's a major hiccup and some major uncertainties here, I do believe that can create some negative price sentiment for the stock after earnings. The final thing is just how is this company doing in its goal to kind of continue positive free cash flow? The company unfortunately did cut about 25% of its workforce. Like I mentioned, they wanted to cut a lot of the fat. Unfortunately, it sucks to say that because usually the fat ends up being employees. But the company is expected to kind of at least be profitable on adjusted EBITDA numbers. So things to kind of consider. And those are the three things that I'm going to be watching. Again, this is a stock that unfortunately I'm bag holding, but I do want to take, I do believe in the long term of things, as this is one of the few companies that I was always excited for it to go IPO. Now, the third company is going to be another company. Remember, SUPERMICRO I didn't own. Astera Labs I don't own. So Astera Labs is sitting at 71, market cap of $11.7 billion. Year to date, the stock is down 47%. This was a massive, massive hype stock during this AI cycle before, one that I didn't really want to take a closer look at. Now, I want to say maybe with the correction, a lot of the risk has been eliminated, right? If you are down 50% from your overall peak, a good amount of risk is eliminated. It doesn't mean stocks can't go lower. They still can, but at least the risk to reward ratio is a little bit more balanced. It's not skewed one direction. So over here, we can see for the upcoming quarter, the company is expected $152 million in revenue. That would be a triple-digit year-over-year growth, 132% year-over-year growth. We're also expected earnings per share to grow. One thing that I am pretty interested about is earnings per share is not expected to grow as much as revenue. Might be a mistake here on the analyst side or kind of the numbers here, but it is going to be crucial to make sure that while revenue is growing, that profitability is also coming. You don't want to see revenue growing triple digits and triple percentage digits and earnings per share, the bottom line, growing at single digits. Again, it could be a mistake here, but revenue, that's exactly what the market is expecting, a huge amount there. And we can see earnings before interest and taxes is expected to grow 196%. Now, for those that are not familiar, this is a company that focuses a lot in the AI market. So this is a company that's gotten a lot of traction because their solutions end up going into NVIDIA's Blackwell platforms and also some of the AMD MI300 platforms to help with the connectivity solutions. They have kind of like PCIe 6 fabric switches. They have CXL retimers, and this is where they're seeing strong growth. So what you want to see is that this continues. You also don't want to hear during management that there might be some hiccup, that maybe some of their customers are switching to some of their other competitors and things like PCIe 6 or in some of the retimers. So you want to hear and get a lot of Q&A sessions on how they're seeing the market and can they still grow at these massive, massive levels. The second thing is margin and supply capacity. Even if they're growing this, again, we have to make sure that they are growing in revenue, but everything else is also growing with it. You don't want to go skewed in revenue and then everything else being negative or not growing as fast. The second thing with supply chain, how are they doing with capacity? Are they such in a supply constraint market that it might force some of their companies or customers to go to some of their competitors, right? You don't want to have too much because this is a very competitive landscape. If they're doing really well, I would prefer for them to be doing really well with inventory and with the supply chain, because at least it creates a hurdle for maybe some of their customers to look somewhere else. And the final thing is obviously forward looking. I mean, this AI space, we've heard from all the big tech players, it's still in full swing, but we would love to hear that Astera Labs tells us the same thing about kind of their solutions. The CXL 3.0 memory retimers, are they going to see a strong growth in this upcoming year, like they mentioned? As many do believe this is going to be the inflection point for CXL memory. And then again, how are they doing with the PCIe fabric switches and some of the other solutions that they have in that market, especially because they are in a lot of great products in the AI space. So I don't think this one's going to give us too much of a hiccups in actual revenue growth, but how much is priced in? Because even though the stock is down roughly 60%, for the fiscal year, the market is expecting somewhere around $600 billion. That's still kind of a price to sales ratio, $600 million, not billion, about $600 million. With the current price to sales ratios, that's still almost a price to sales ratio of 20. A little bit maybe closer to the mid to high teens, but it's still trading at a premium. Now we have to see if that guidance still sticks, if it's actually an improvement. But overall, even with the downcrease, there is still some risk and valuation in my opinion. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.